Okay, so let's talk about 5 things that you need to look for before you place a trade. Okay, so most people ignore these things, and it's probably the number one reason why you are losing money in the market right now. Okay, so the first thing that you need to look at before you place the trade is the high impact news, right? So high impact news are the news that have something to do with how the market might react, the news that people can react to, and then place trades based on those rules. And those types of news are going to affect how the market moves, right? So the first thing that you need to do before you place a trade is you need to find an economic calendar and see if there is high impact news, right? So there's many tools that you can use for this, right? You can also even if you are using TradingView, if you right click on your chart, there's a button which says show news. If you click that, you are going to see the market is going to show you when the news is released, right? So, for example, you are going to see that you have a small icon right here, which shows you when the news was released, right? So, if you move with this chart right, you are going to see a lot of times when the news are likely to be released again, as you can see right here and right here. The market, there's going to be likely news that are going to affect how the market moves. Now, why do you need to look at the news before placing your trade, right? So what happens in the market is that when you are placing your trades, like for example, if you are testing your strategy, right, you are not counting these types of movements, right? But what happens most of the time is the news are going to affect how the market moves and how your stop loss are going to be hit, right? Okay, so here's an example, right? So let's say you were placing this trade, right, and you were seeing that this is a zone where the market have rejected once and it's coming back, and the market is going to likely push to the downside, right? So let's say at this zone right here, you were looking for the market to push to the downside just because you are seeing a lot of rejections right here. If you can see this, there's a lot of rejections at this point right here, right? So maybe you wanted to place a trade right here, maybe you wanted to sell right here at these rejections. You also maybe wanted to put a stop loss above here, and then you take profit down right all the way down there. Okay, there's also, to confirm this, you probably have seen a trend line here, and you probably think that the market will reject here and break the trend line going to the downside. This is just an example, right? But as soon as that happens, right, you are going to see that the next thing that happens is we have the news coming up right here, and then look at how big this candle is, right? So if you are trading, or maybe you're placing a stop loss based on maybe the ATR indicator, right? The ATR for these candles was not going to be big because these candles are small. But look at this news candle, how big it is, and the following one, how big it is also. And then you can see soon after, the market started making these huge candles, increasing in volatility, right? So as a trader, you probably don't want the market to just suddenly move one direction to your stop loss, because sometimes if there's a slippage, you probably are going to lose more than you had wanted to risk in that trade. So that is reason number one, that you need to look for news. If your strategy doesn't follow anything about the news, your strategy doesn't need news, you have to check if there is high impact news, and if there is high impact news, you need to stay away, right? The second thing that you need to look for if you are placing your trade is the higher time frames, right? So you can see that this strategy, this chart right here, this is 5-minute time frame of GBP USD, right? So you can see that right here we have the market moving a long way to the downside right here, right? And you probably are going to make your decisions right here. Maybe you draw some trend lines, as I said. Maybe probably you were also going to maybe get some kind of pattern right here. This is just an example. The next thing that you can do here is you are wondering, where can I place my trades? How the market is going to move up from here, right? The easiest way that you can help yourself if you can't really read the market is you can go to the higher time frame. So let's say, for example, this was the 5-minute time frame. If I go to the 1 hour time frame, you probably see that there's less candles right here, and there's less noise that is happening right here. And even if you look at this at the higher time frame, you probably were going to conclude that I was not going to be placing a sell trade, because this market is moving way up to the upside right here, right? So maybe the smaller time frame is confusing you. What you would do is go to the higher time frame like this, right? And once you go to this higher time frame, you probably wait for the first bearish candle right here that is going to be created. In this case, this white candle right here. And then now, if I go back to the 5-minute time frame, I probably have now a reason for me to be placing this trade. So let's see how it looks like, right? So you can see right now, I have the first candle right here. So if I draw my trend line again, right? So if I draw my trend line again right here, you can see that now I have I know that we have a breakout, because on a higher time frame, I've seen this because I've seen this being a huge bearish candle, right? So from this is where you would be looking to place your trade. So in this case, for example, probably you would wait for a retest to this trend line, or you would just place your trade like this, right? And then maybe your take profit is all the way down here, right? So whatever happens next, now you have a confirmation, you have the confidence. Why? Because you have looked on the higher time frame and you have confirmed that this is surely a chance for the market to drop to the downside. So in this case, you wouldn't know what would happen next, but probably the market is going to go to your direction and you were going to profit from this trade. But the most important thing that you would do is using the higher time frame to make the charts clear and make you understand how it works, right? Now, the number 3 thing that you need to look for before you place your trade is the entry rules, right? Now, when you're talking about the entry rules, right? So in this case, I just said you would probably just sell as soon as the market breaks, right? But this is not clear enough entry rules, right? So you need to know exactly when are you going to be placing that trade. What is going to trigger you to place that trade, right? So for me, in this case, I would say, okay, first I see the market breaking this zone right here, but I want to see a retest. Either I want the market to come back into this trend line before it pushes to the downside like this, or else I'll mark maybe the lowest point right here. And then I want to see the market breaking this and retesting this zone, because remember, from all the strategies that I probably have taught you before, the market, when it reverses and breaks below this zone right here, right? So if you want to confirm that this market is now a reversal, we would want to see, let's say, the market moving up here, reversal moving up, and then breaking below this zone right here, right? This is what is going to convince me that the market is surely now going into reversal. But now, instead of just placing the trade when the market breaks, the entry rules now tells me that I need to wait for the market to come back into this zone right here. Now, here it did, but it didn't really touch it, depending on how big your zones would be, because this depends on you where you put this zone, right? There's no where you say this is the correct point to put it, right? But if you move the market, if the market moves, right, you probably are going to see the market coming back again into this zone in the future, right? So in this case, you can see the market is still pushing to the downside. It didn't come back into this zone, but you need your entry rules to know that if the market, if I'm placing the trade on this zone right here, what is it that I need to see in that zone exactly, right? So you probably want to see long weeks of rejection. You probably want to see, if you are using indicators, some type of a crossover, or the market, or if you're using volume, you probably want to see maybe more trading volume on that zone that you are looking to be placing your trade. That is what is called your entry rules. So remember, these are just simple examples that I'm showing you, just to make sure that you understand exactly what I'm talking about. Now, the third thing that you need to look for before you place your trade is your exit rules, right? So the trade is not won by being placed. The trade is going to be won once you exit that trade, right? So firstly, you want to know your entry and exit rules. So once you know the entry rules, you also want to know when are you exiting that market, right? So I'm going to give you an example right here. So if you look at this chart right here, right, you probably, you see that we have a trend line going up right here. We also have some kind of a pattern right here. If we use this, or if you use this one, the high here, right, you can probably see that we have some kind of a triangle pattern right here, or do you call it a wedge? What do you call it? So if when the market moves right there, so we want to find a reason to place the trade, right? So you can see the market coming back here, and then there's a breakout, right? So you can see this trend line to the downside have been broken, and then there's a retest back into this into this trend line right here. Right now we are looking for our entry rules. Maybe we are looking for our first bearish candle. Right now we have our first bearish candle right there. Right now, once we have this first bearish candle, the next thing that, as we said, we want to place our sell trade, right? But now the next thing is knowing exactly when where are you going to exit, and you want to know where are you going to exit if you win, and you, mostly importantly, where are you going to exit if you lose. In this case right here, so let's say I would mark this zone right here, right? So this is the highest point, this is my support zone, right? And I will put my stop loss a few pips above that zone, and now my take profit comes next. Where am I going to put my take profit, right? Now, if I put my take profit right here, that means I will make 1 to 1.5 risk to reward ratio, which means if I risk $100, I would have to make, if I win, I will make $150. But if I lose, I will lose that $100, right? Now, I need to have these zones predetermined, right? So before you even place your trade, because what most people does is that they will just come to this market right here, right? And then they will just place their trade, right? They just place their trade, and then after they place the trade, this is when they try to figure out where to put the stop loss. No, this is not exactly the right thing to do. The right thing to do is know exactly where the stop loss is going to be, where the take profit is going to be, and then once that happens, you place your trade. And if the trade goes to loss like this one, you will know that this is my predetermined zone where I should accept the loss. Right now, if you had said, okay, my loss is right here, my stop loss is all the way up here, right? That means now your take profit is smaller than the stop loss, which is not good. Now you have to also determine where your take profit is. So let's say you put it right there, the take profit, right? This is now going to be a different trade from the one that you placed right here, because this one is going to take more time with you being in the trade right there, right? Because this is going to take a little bit more time. But the truth is, what you want is to know these zones before you place the trade. Okay, then the number 5 thing that you need to know before you place your trade is your lot size and your position size, right? So the distance between your entry and your stop loss, right? So as I said, the stop loss was probably going to be here, and you probably would have hit your stop loss, right? But the distance between your entry and your stop loss is the one that determines your lot size, right? So you so once you know this, right, so you know that I'm placing my trade and I want to put my stop loss right there, right? Now you're calculating how many pips are there from my entry to my stop loss, right? So if you get, let's say, for example, in this case, we have 61 pips right here. So now you know exactly that we have 61 pips. That is what you are willing to risk. And if you win, you are willing to take 116 pips, right? So you are saying now, how much money do I need to risk so that if the market moves against me with 61 pips, I will be comfortable taking this loss, right? So for example, right, if I wanted to risk $61 in this trade, I would say, okay, I will use $1 per pip, and $1 per pip is going to be a 0.10, which is a mini lot or mini lot size, right? So if you use more pips, then the bigger the amount of pips from your entry to your stop loss, right? So because most people, what they think is that if I put my stop loss right here, right, and let's say I was placing this trade, right, and if I put my stop loss all the way up here, right, and maybe my take profit all the way down here, right? So most people think that if I do this, this simply means that I'm risking more money. No, the bigger the pips, the smaller the lot size, and you can be risking the same amount of money, the same $61, if the stop loss is here, or even if the stop loss is here, even if the stop loss is here, you can be still risking the same amount of money. All you have to do is adjust the lot size. You can use a lot of lot size calculators right here. If you check the link in the description, you can check out our website. We have this lot size calculator that can help you get your position size for any of the trades that you want to place the trade. Okay, so if you get this, go ahead and start making money in the market. Make sure you check these 5 things, right? If you want to get free signals, make sure you check out the link in the description below, because I post the signals on WhatsApp. You can get them directly to your WhatsApp completely for free. You can copy our own trades. Check out the link in the description, and I'll see you in the next one.